the major factors people should really be focusing on is the economy, the state of the economy. Why are people shifting into gold?
This podcast is brought to you by SafeAsGold.com. Call now for your free gold kit at 1-800-510-9594. An $80 value, this kit and DVD will show you everything you need to know about gold and how to use gold in your investment portfolio. Call 1-800-510-9594.
It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Jonathan, as always, it's good to talk with you.
Well, thank you. It's always a pleasure to be here and help educate the listeners. I know people that have been following this show have now realized where I've been mentioning gold hitting $1,000 an ounce. It's here. It's finally reached $1,000, and this is a very important time for gold because as it remains above 1,000, we can then see the threshold move to $1,200 an ounce, which I'm also predicting by the end of this year. And as other experts are also noticing that gold could go to $3,000 to $4,000 to $5,000 an ounce in the next few years. And on today's Gold Show, we're going to explain the benefits, the advantages of owning gold as a part of a balanced portfolio. It's not too late to get in. In fact, this is the perfect time to protect those shrinking dollars and preserve your capital. And we're going to show you how to do that on today's Gold Show.
And before we get started, Jonathan, is it possible to send a copy of the freshly updated Gold Guide to our listeners so that they can get the background of the history of gold?
Absolutely. For 2009, this gold guide is updated to show you how to purchase gold at the lowest possible prices, which gold coins and bars will give you a better return in the future. If you have a retirement plan such as an IRA, just like it was featured in the Wall Street Journal, we will show you how to roll that over, but into an IRA backed by solid gold. It's still an IRA, except you have physical gold in a segregated safety deposit box that's actually worth more than the shrinking money that you have right now. And if you want to educate yourself, arm yourself with the facts, with the knowledge, so you can make an educated decision about purchasing gold.
All right, Jonathan, I'm looking at some of the news headlines of this past week. Gold again tests $1,000 an ounce is on one of the major papers. Another one says, is gold the right recipe for disaster? Take us into this big news story this week, right?
Absolutely. As I've been predicting on the previous shows, especially leading up to the holiday seasons, you're going to see gold continue its rise and break the $1,000 an ounce barrier. During the holiday seasons, people tend to trade more gold, especially for jewelry demand. But put that aside for one reason. One of the major factors people should really be focusing on is the economy, the state of the economy. Why are people shifting into gold? Well, one of the reasons is because gold is a flight to safety and security. I always refer to gold as portfolio insurance. And what I mean by that, just like you have, medical insurance or insurance for your car, if you have a stock portfolio and you've seen it losing value, whether it's due to inflation, whether it's due to economic environments, well, people tend to take a portion of those dead dollars, move them sideways, store it into gold, a tangible asset that you can actually hold on to. And when people pick up the newspaper, even in the Wall Street Journal, there's some great articles, not so great for us, but really about knowing why gold is going up, why the dollar is going down, and what's the recovery rate for our economy right now. And the outlook is it's going to get a lot worse before it gets better. Also, Alan Greenspan definitely thinks along the same lines. He was recently on a television show in the BBC, which is a UK television channel, and he says things are going to absolutely melt down once again. And if we look at articles from the Wall Street Journal, where they're talking about the FDIC, who insure our dollars in the banks, they're talking about how their FDIC insurance funds has actually shrunk to $10.4 billion, which is actually has to protect $4.5 trillion. And the agency said it had 416 banks on its problem list at the end of June, and that's up from another 305 since the end of March. And the FDIC in a quarterly report said the industry posted an aggregate net loss of $3.7 billion, and they have a long way to go before they're actually out of the woods. So the FDIC is in problems. The banks are continuing to collapse, the dollar's shrinking, and this all really sums up a bad scenario for investing in paper assets. And that's why I truly believe it makes sense to have a balanced portfolio. It doesn't mean liquidate all your stocks and purchase gold. That's not what I'm saying. What I'm recommending, though, is you have a balanced portfolio that does include stocks, bonds, treasury bills, but also a slither of that pie should be gold, physical gold that you get to hold on to. That's where the security is right now. And as I mentioned, as gold's breaking $1,000, just like I predicted, expect gold to get to $1,200 an ounce. And within the next few years, $3,000 to $4,000 to $5,000 an ounce is very foreseeable in the very near future.
We're going to share the number for you to call, the website as well, to find out more. A lot of the articles this week talk about the case for gold, and they refer to the IMF expecting G7 countries to show a combined fiscal deficit equivalent to 10.36% of GDP next year. They're saying that the soaring fiscal deficits favor gold. You've talked about that as well, haven't you?
I've talked about how, we're in such a huge trade deficit right now. The trade deficit's topped $1 trillion for the first time, and Bloomberg announced it could reach $2 trillion by the end of fall. Now, the next crisis that they're talking about also on Bloomberg is the bad loans are the next wave of crisis. So when you talk about foreseeable crises, when you talk about, the budget deficit, and when you have a look at, throw this into the mix, things aren't good. So people are hedging themselves. They're looking for insurance for their dollars. They're finding it with gold. It's not just me saying this. It's other Wall Street pundits too. In fact, Northwestern Mutual, I think they're the third largest life insurance company here in the US. Well, for the first time in history, they just purchased $400 million worth of gold to add to their insurance fund. And being questioned by Bloomberg, the CEO of the company said it just seems to make sense. Gold is a great hedge against protection. So much so that we even have the likes of Warren Buffett. Well, he just recently acquired two of the largest gold manufacturing companies out there today. Why? Long-term value in growth to be found in gold. Now, people like you and I, we can't afford to buy a gold mining company, but what we can do is we can protect our dollars by holding onto physical, tangible gold. That's where the security is, where you have it in your hand. It's not a piece of paper. Wall Street pundits are screaming, cash is trash, cash is trash. There's a reason for that. And the biggest mistakes you can make in 2009 and 2010 is by simply not investing in precious metals.
Well, Jonathan, you have been spot on over the years that we have done this show together, to hear you talk about what's ahead and then to see it happen like clockwork. I think when we started doing the show, it was like in the 600s or something, the price of gold. But There has been a steady, marked increase, and the gold rush is really on right now. People may ask, is it too late? At $1,000, is it too late? You're here to say, no, it's not.
Well, not only do I think it's not too late, the people that get in now are going to see a lot of growth, a lot of gain over the next 5 years, in my opinion. When we see gold at $4,000 to $5,000 an ounce, I think that's a very realistic number, especially with all the money that's being printed by the government right now. I mean, it's just spurring inflation, and it's really adding fuel for the price of gold to continue to climb.
Again, go to the phone right now. The Capital Gold Group standing by. Get that gold guide sent to you. Get started today. And Jonathan, we talked on recent programs about the demand for gold being up. You're not the only one talking about gold right now, and the phones are ringing. And unfortunately, that means that some of the suppliers are not producing the coins. Explain what's going on here.
Well, in fact, one of the biggest suppliers of gold coins is obviously the U.S. Mint. And one particular coin that they're not producing right now is the Proof American Gold coin. The Proof